Good evening, good morning, good afternoon, depending on when and where you listen to this call from. Nicholas Conti here again, back at you guys with another weekly preview. Today we have four great trade setups lined up, and we're also going to dive into some of the sentiment indications we use that allows us to hold these trades and actually progress in our trend following strategies. So without further ado, we're going to jump into some charts. We do have Euro USD pulled up. We've been itemizing a couple of things with EU. We're currently actually in this trade looking for another entry. So just kind of walking down some of the price action. We actually kind of topped out up here around the 123 area, dropped down, got a pullback to around 122, which was a key level for us. We actually facilitated some trade there. We did get in around the 123 level as well. We've been holding both of these trades. So we dropped, came back, retest, and we continued the downside action. Last week we did end with a nice green candle. So we are looking for this double trend line area to actually hold and give us some type of resistance. So we can see if we itemize price action. We can see how price bounced off of the zone before it bounced again. We finally got a break, which actually shows us, it was an important key level for us. So we're looking for price to come up and potentially come up and test this. Any rallies to the upside will be selling opportunities for us. And we're going to be looking to facilitate or play this trade to the downside. Now, one main thing that I do see most retail or newer traders, they actually shy away from sentiment. Now, looking at these sentiment indications, you don't have to be an economist or having a degree in economy. There's a lot of top tier economists that run these reports or pull this data, and we actually pull from it, which allows us to kind of see the forest over the trees. So a couple of things we have going with Euro. Guys, give me a second. I'm gonna pull up my actual spreadsheet. Actually going to be introducing this week. This is going to be our weekly sentiment PDF or spreadsheet. We'll send this out to our members, whether in Epic or personal members or private members, and they'll be able to kind of read through this and get some tips on actual sentiment. So one of our favorite sentiment indicators is the COT report. Actually, let me do this. If you guys aren't familiar with sentiment, we are diving. We do have a new video coming out for our members. It's going to come through and break down how to find sentiment in the market. Most top tier traders or professional traders use sentiment to come to a conclusion on market direction or the actual things behind the chart, which was actually moving price action. So it does give you an edge or an advantage to typical retail traders when you're using sentiment. So a couple of different things we like to use. These are a couple of different sentiment indicators that we do use in our trading. Things like the commitment of trader, the VIX, and we do also use some different contrarian methods that you will see inside of this weekly spreadsheet. So this will be released to members beginning of each week. And as you guys learn some of our strategy, our techniques of how we're moving through the foreign exchange or any market, you'll be able to kind of put this together and follow the clues or follow the yellow brick road towards optimal pairing and some nice trade setups. So when we're able to catch these 300, 500 pips, technically you wouldn't be able to hold those unless you have some big data behind it, giving you a reason to actually trend follow. So this is great, helping traders learn how to hold the trades. The thing in the market is you have to allow your trades to work, give your trades room to run, so your winners can pay for your losers. So what we have here is we kind of start off with the COT. When you see, let's take a look back. So one main thing we have is most people, most traders, as we can see here in our COT data, most traders, actually retail traders, are going to be bullish the euro. So we want to position ourselves more like a bank or a hedge fund, and we want to do the opposite of what most traders do. We all know that about 80 to 90% of retail traders lose money within their first 90 days. So we want to do the opposite and kind of align ourselves with the smart money. So with COT here, we see that most speculators are heavily long in the euro. They're also most speculators, which also includes some small funds, some smaller hedge funds. They're going to be going heavily short the dollar. Now, that expectation is built out on the euro is going to be doing better going forward than the dollar. So, a couple of things we see as far as the data that doesn't line up as factual. We see the Eurozone is heavily impacted by the shutdowns and the virus. All around, the dollar is making a better recovery currently, and we can kind of see it starting to take form in price action. So I will save you guys the more of some of the other data that we're looking at. It actually becomes more exciting the more you learn about macro fundamentals and some of the things that actually drives price action. But as far as Euro USD, we're going to be looking forward to potentially pull up, looking taking these as short opportunities. We're going to be holding our position, kind of moving some of the stops down. Now, if it doesn't pull up or do a pullback beginning of this week, market open, we'll be looking to enter right up under 190.50. So underneath this double bottom, and our target is going to be 118 and 116 for Euro USD. Next trade we'll look at is Euro JPY. So we did get an entry here around 126.90ish, 127 area is a strong level for us. So we do currently have a stop about 127.50. Now, if this does open and it pushes a little higher, we actually may go ahead and close this out. Don't let it hit stop, and we're looking to facilitate trade underneath this actual trend line. So, pardon me. So Euro going forward, we also like to look at things as bond yields. So we're looking for the Euro yield to be lower than the JPY, or to actually perform worse than the JPY going forward. Great information you guys can start. If you don't look at yields, it does give you or dictate price action, or where the strengths or the weaknesses of certain currencies. So it'd be a great thing to implement into your trading. Again, shameless plug. We're definitely diving over these topics in our member center. So you guys are more than welcome to contact me, and we'll get you kind of situated in the right direction. So fortunately, that wasn't my bond yield one, but we're working on a lot of data, pushing out a lot of content to you guys. Speaking about kind of backtracking to the dollar, we have one of the biggest short positions in history. It's kind of going back and rivaling the 2008 crash. So history doesn't always repeat itself, but it does rhyme. So more information on the euro does consist, or it is trade weighted with the dollar. So people bullish the euro, bearish the dollar. We're looking for a flip on that and potentially stops being ran. EJ, prime spot 125, break this psychological level of 126. We'll be looking to facilitate trade to the downside. The next trade we do have up is Euro GBP. So we got a nice trade in Euro GBP. We've been in this trade since around a 90-ish handle. Looking at price action, we had some real choppy price action, big spikes. So I'm kind of a fan of more of a swing trading approach. Avoid some of these huge spikes and random or sporadic movements in the market. And we got our move down, nice push down. We've been moving down, down, down. Got another nice move to kind of shift and break a zone. We're looking at price to come back up. The euro is kind of oversold at this time, so we'll look for it to come back up and test this previous zone here around the 88 level. We're looking at it as shorting opportunities. First target, 87. Longer term, we do see ourselves coming all the way down to 83. Come out, we zoom out a little bit. We see these nice little zones here where price peaked, support equals resistance. Give us a nice, that's a nice zone for 87. But going forward, we do see GBP, especially after the Brexit decision, to continue to strengthen in a better place than the Eurozone currently. But this is the zone I was looking at. We see kind of like a little double bottom of retest. So 83 is key level for us. Gonna be looking to longer term get back down to this area. Next trade we'll look at is going to be a proxy. It's going to be a Euro SEK. So anytime the euro is going down, we'll see the SEK, move in a similar behavior or manner. So as far as price action, we had, nice push up, pull back, retest. We actually came right down to this actual EMA, formed a trend area. Now we're coming back and we're right back down at that EMA. So we'll look for this to potentially bounce here. And longer term, macro goes on our side. Economics, we're looking for a push all the way up to the 90 level. So it'll be a good trade opportunity for us. Last thing I did want to come through is just show you guys some of the tools we're using to come to these conclusions. That I always tell my traders, you have to learn how to look outside of the charts to, keep yourself from being so quick fire in and out, in and out. You want to, allow your trades room to work and grab a hold of some of these nice trends. So to do that, we do rely on sentiment. Just wanted to kind of showcase some of the things we're going to be highlighting a nice, neat package for our members. You'll get a lot of sentiment data and a few fundamentals that we're actually looking at. We also look at client positioning. So example here, one nice trade we're also itemizing. We didn't look at the chart. All we're looking at is AUD/USD. These things kind of give you guys the trade. So price action, these are leading indicators to price action. You hear a lot of rhetoric about, the secret sauce inside the charts and look at this institution and this and that. Well, this is really what professional or hedge fund traders are using to come to a conclusion. So we like to kind of judge or pull up sentiment. And let me see if I can wish I could find my walkthrough. So you want to dive a little deeper and kind of understand what's happening in the foreign exchange market and how these different currencies, pairs, and also assets have relationships. Makes your job a lot easier and avoids, fake outs, false moves, failed patterns that most typical traders run into. So you have a more of a overview or look over the forest over the trees. So out of USD, we can see here that most retail traders are going net long. Biggest information you want to take here is that we're typically using the contrarian method. We all know that, once so many traders go one way, the banks come in and sweep from under them, sweep the rug from under them. So it's called a contrarian view to the actual crowd sentiment. The fact that traders are net long suggests that AUD/USD prices may continue to fall. Now, not only that, so we have this piece of sentiment indicator. We are indication. We also look at things like the COT report. And then we want to look at different relationships that we'll find in the market. There's certain things that we talk about like risk on, risk off. We won't go into too much detail, but you guys are free to reach out and we'll definitely, we have a couple of walkthroughs on what is risk on, what is risk off, market sentiment, wash on, wash off, how to actually, get a more defined view of what's going on, allowing you guys to build more trust in your trades and actually, produce what we're all looking for at the end of the day, more profit. So we like to combine, when we look at AUD, we like to look at the iron ore prices. We did see, a dip in iron ore. Actually, if we looked at the chart, we'll see a dip in AUD, USD. Now, iron ore had a massive run up using China was buying a lot of iron ore. All these different economies have, trade going. So it's kind of where we get the relationships from, import, exports. It's not as difficult as most, feel or take it to be. There's a set kind of guidelines in the relationship you see, and we use those to make, higher level or more higher probability with higher risk to reward trades. So we see this drop down, it's going to weigh in on the AUD. Last quick thing we're going to be having covered here is we also look at things like yields and bonds. So we'll give you guys a more in-depth look into the market. A big thing that's going to help our dollar play is that we have inflation expectations at a record high. We also have the yield curve. We also have the yield curled. Can't even talk. So we actually have the yield curve steepening. And a couple of little techniques that, we dive in. A lot of our people expect and look forward to. Big thing we're seeing here is the ISM paid prices starting to kind of, it's a great leading indicator for CPI. So if it continues another bullish, if it continues moving strongly, it's another bullish fundamental for bonds. Another COT positioning showing, everybody's feels like the dollar's going to zero. This would have been helpful earlier with our Euro USD chart. So this is the CIT, the City Pain Index. We noticed that every time we get these levels in this index, get a nice rally, nice drop, nice drop. So here we about an 800 pip drop, We see here with the same level. Not sure exactly how many pips, but we should have a nice run to the downside. So I know a lot of my members have been looking forward to this. Alongside of the course on sentiment, we're also going to be throwing this out every week. You can find this in our actual member section. It'll be a nice little PDF, walk you guys through what we're looking at, our weekly preview, as well as some of the sentiment indications helping us come to a conclusion on those trades. Short and sweet, few different trades we're looking at. We're heavily looking into the euro. So I hope this has been helpful. If you guys have any questions, concerns, feel free to message me at nick@kingvisionsfx.com, or you can simply reach out on all forms of social media. Looking forward to this trading week. Once again, everybody trade safe, and we'll see you guys for our midweek preview.